the Online Collections Technology Think Tank 4.1. Hopefully people who were with us in the last session enjoyed that. We had a really good conversation around value of communications. We got into talking about ChatGPT, which was really an interesting subject. So hopefully people enjoyed that. If you didn't register on the last session or didn't see it, then those videos will be available hopefully within the next week or so, and you'll be able to view that. But we move on with our day. We've got a really good session coming up talking about the management of collection risks, which we hope you will enjoy. But before I hand over to our chair, I just wanted to quickly tell you about how you can engage on the platform. So really quickly, there's information button on the left-hand side. Click on that. You've also got the speaker profiles, the third icon down on the left, which looks like a person, ironically, and you can learn information about our speakers. There's 1 or 2 links after this event. You can learn about other Credit Connect events, so have a look at those, and also a bit of information on our event sponsor today, which is Webio, who spoke in our last session. But for now, let's move on and talk about collections risks. We would really like you to engage with the panel potentially. When I say engage, you can ask questions as long as they're not too controversial. We'll share them with our event chair, and if we get a chance, we will ask those questions within the discussion. But anything we don't cover, we will try and cover in our event review, which will be available next Thursday on the Credit Connect website. But for now, let's get the conversation going, and I'll hand over to Chris Warburton, who's our event chair, and he will carry on the discussion. Chris, over to you. Thank you.
Thanks, Colin. So I hope everyone enjoyed the last session. I know we've got another fantastic panel coming up talking about managing collections risks. Last time we talked a bit about, I suppose, customer engagement. And I suppose this one here, and we talked about that in the context of the cost of living and the changes that are going on in the portfolio. This session here, we want to talk a little bit about how does that affect, collections risks, the risks that we see within the portfolio, some of the pieces around modeling, what's the role of data and technology within that, and how do we actually start to measure that risk, and how should it affect our processes in terms of how that's kind of changing. So that's going to be the focus for this discussion. With us got sort of a great panel. So we've got Nina White, who's the in charge of financial customer care at Thames Water. So Nina, welcome. We've got Chris Jackson, who's the head of collections at Aldermore Bank and Motonova Finance. So welcome, Chris. And obviously in the financial lending space, and I don't need to really introduce Thames Water, obviously one of the largest, if not the largest, water utility in the UK, in England, certainly in England. And we've got Elid Aycan, who's the chief product officer for Ceverine, and they're in the digital collections technology space. And lastly, we've got Stephen Lubbock, who's the director of technology at COEO. And their technology-driven credit management and customer management kind of solutions, engagement solutions. So everyone, welcome very much to the discussion. It's great to have everyone here. And I think for the first question, I was going to go back to the cost of living piece really, and say, has the cost of living is it altering our approach to sort of collections risk? And maybe Chris, I'll come to you first in terms of from a mortgage and motor finance lending point of view. I mean, how are you sort of seeing that in terms of like changes of credit risk within the and collections risk within the portfolio, within collections process at least anyway?
Yeah, thanks, Chris. I think it is changing the way we look at it quite significantly, actually. It's been one of a turbulent few years. The old adage of looking at data from previous years to give you your trends and your analysis isn't really relevant anymore because we've gone through COVID, gone through Brexit, into cost of living in a high inflation environment. And that's causing a lot of challenge around relying on historic data. We're almost having to look at it again now to understand what is the environment we're in, what data can we rely on. I think that's the biggest challenge that we've seen, certainly in our group at the moment, around what is the right data to understand to get to the right solutions and to manage that risk, but also to ensure that we're doing the right things for our customers. I think there's a real challenge around what is the right data at this stage. I think that's the biggest point we've got.
And Stephen, to bring you in, I suppose you do some of this from a COEO point of view in terms of technology-driven credit management and those kind of things. I mean, what are some of the themes that you've been picking up?
Yeah, so I think it's really in terms of you know, assessing data. It's being flexible with the data that's presented to you, and sort of using it to its appropriate value. So in respect to what we're seeing, you know, if we're getting more vulnerable customers coming through, it's how do we identify them quickly? How do we sort of resolve their issues as quickly and sort of efficiently as possible to get the best solution for everyone, really. And yeah, go on.
And is there a sense around sort of like how we have to sort of adjust for, I mean, things have been changing so rapidly. I mean, is that flexibility, we talked about it in the last session, is that flexibility sort of coming in into almost like being able to, a requirement to change the parameters and update the parameters, but the history, as you were saying, Chris, isn't really like indicative anymore. I mean, is that something that we've got to start to think about? I mean, and are we able to do that?
So I think it's kind of easy for me to answer from our perspective, because, you know, our COEO as a business is independent of people's sort of internal processes, and we've got a development team available to us to sort of implement tools as quickly and efficiently. So probably from our perspective, we're seeing the flexibility coming from client requesting to us and how we can help them solve certain issues that they don't necessarily have the ability to resolve in-house or internally with their own teams.
Right. And I suppose that, I mean, Nina, coming to you just in terms of we talked a bit about financial services there, but I mean, the water industry is somewhat different in terms of like, you know, guaranteed supply, continuation of supply, and those kind of things. I mean, you must be seeing some of the same stresses coming through from a customer point of view. I mean, how do you sort of think about that and handle it? And what are some of the themes that you've been seeing?
Yeah, so I mean, we have the situation where we don't choose our customers and our customers don't choose us. So, you know, if they're in our jurisdiction, then we are the supplier. And so a lot of our focus has been on, I suppose, a few areas, really trying to surface and being a lot more proactive around affordability and ensuring that we are identifying and targeting customers who may have affordability challenges and also may be eligible for a social tariff, so we can reduce their bills. And so therefore, yeah, that takes some of that burden away from customers if they're in the low income bracket. But also then just making sure that our other solutions of forbearance are fair. And, you know, if somebody genuinely cannot afford to pay, then there's very little point in pursuing for an amount they cannot afford to pay. So ensuring that, you know, that our plans are flexible and that they can be paid over a longer term. The complication with water is that it is continuously consumed, and so the problem that we need to then navigate is how we help and support our customers from not falling into continuous indebtedness and that sort of level of that persistent debt from a water bill perspective. I think more generally within our broader portfolio, it's being a lot more targeted. Being a lot more targeted around pre-collections, a lot more signposting for those customers, because I think the big thing with the cost of living crisis is it's impacting a far wider spread of the country, and particularly those customers and those households that were just about managing are no longer managing, but they sort of fall through the cracks of traditional support that organisations have traditionally lended. So it is about coming up with different ways of solutionising, particularly for this in the short term, to help those customers as well.
Yeah. I mean, so it seems like there's almost like there's an issue of identifying where there might be issues, and there's some commonalities there, and then you have different processes, sort of, and how you deal with that based on the product. But some of that comes down to, I suppose, the data, doesn't it? And yeah. Elif, I was going to bring you in there around like the value of data and like what's the value, I suppose, of technology and data in terms of really understanding that? And are we gathering enough data? I mean, do you think there's more data that we can gather to give us more insight into the different cohorts, in terms of like who might be at risk?
I think we have many data around us, but the problem is, are we processing them enough? Because although we talk about data all the time and it's a very focused topic, it's not easy to use data very efficiently because it's a big investment. When you think about it, we don't store all the data and we don't collect all the data about what's happening around us. And also, data analysts are very expensive resources, and I haven't seen many companies who dedicate a data analyst team to collections. So when you check the companies like Google or Netflix who are really benefiting from data, they have big data analyst armies, we can say. And I think it's normal because investing in data is investing in something you don't know the value of it. And I think we still don't see collections as a technology business, but mostly back office operations. That's the reason. So I think companies are investing in data step by step in an iterative way. And when they see the result of one thing, they invest in the other thing. And about using extra data, now many companies focused on vulnerability and affordability. And that provides some new data sources available, like data sharing about vulnerability, or we have some solutions about affordability, and they provide this for us. But the problem is, for understanding the resilience, and it's not only about today's affordability, it's also about tomorrow's affordability, and that means almost a real-time tracking of data. And I think this is where we have to change our systems.
And you mentioned two interesting concepts there. One was around future affordability, and then the other piece I definitely was around resilience. And I'm quite interested to hear what you hear around that. I mean, that's one of the dynamics that certainly came across was, people might be struggling, and new people might be struggling. They weren't struggling before, but they had a certain amount of resilience before even actually saw that in collections. And almost like, how do we sort of identify that? And particularly if resilience is going to run out, because at some point it kind of runs out. I think that links through to some of what you were saying, Nina, as well, in terms of like maybe new cohorts maybe getting into difficulty, and we've all got some resilience, some of it's built up over the last few years, but it's sort of like, it feels like it's sort of, at some point it's gonna end. I mean, Chris or Nina, just from a business point of view, I mean, do you see some of that? Is that some of the dynamics that you've been seeing?
Yeah, we certainly sorry, Nina, apologies. So we're certainly seeing that, and I absolutely echo what Nina said around the demographics are certainly changing. It's not the traditional collections customer that we're always seeing anymore. It's that next demographic up where they are struggling to understand, and we're almost educating via our frontline teams to how to manage and to deal with the rising costs. I think affordability is a really interesting concept at the moment around. We've got currently an internal debate at the minute around how long should you set a payment arrangement for? What's the right length of time? How long can you guarantee that affordability, that it is the right amount for that customer to pay over a 3-month or a 6-month period in a quite turbulent environment with cost of living increasing, every time you turn a corner, bills going up. So I think there's that real challenge in the industry at the moment around how we make sure that resilience and sustainability of not just arrangements, but the customer's affordability is there as well.
And over the longer term as well, I suppose we've got these economic forecasts that seem to be varying wildly, don't they? I mean, it seems like we can't see what the next sort of like 3 months or 6 months is going to be, because in fairness to the economists, I mean, the situation kind of changes. I mean, how do we sort of get better certainty around what's going to happen, or how do we deal with the fact that there is this amount of uncertainty sitting out there? I mean, Stephen, I suppose, I don't know if you've got a kind of a view on that.
So I think, realistically, in the current climate, anything can happen clearly by what's happened in the news, the cost of living, COVID, and all that. So really, I think we're in a situation where we have to deal with that uncertainty on a month-to-month basis, and that's really where sort of digital tools, AI and machine learning come in. If we can apply the tools that are around us to understand the customer's circumstances quickly and easily, we can then put the measures in place to resolve that issue as quickly as possible. And if you take sort of a volume approach to that and use artificial intelligence and sort of machine learning methods to identify vulnerabilities through communications or through how people have interacted with us as a business, we can get them to the right people as quickly as possible. In terms of where do I see, 6-12? I'm not sure, but what we are doing during this period is building tools that help us quickly adapt to these situations moving forward. So it's really not a case of, are things going to change? It's how do we manage in an uncertain world, I think.
I mean, how much of a paradigm shift do you think it's going to be for us? I mean, because a lot of us have grown up over the last 20, even 30 years, probably even more than that, might even be 40 years. We've had this period of stability, and we've had period of pricing stability. We've had periods of quite a lot of certainty around that, and it's almost like we had this window really since the 70s. I mean, is it going to fundamentally change business models in terms of the way we lend, the way we manage customers? And particularly if you look around forward-looking payment arrangements, for example, I mean, it becomes different if you've got sort of high inflation.
I think you'll have different people in certain sort of decision-making positions as well. I mean, if you look at me, I graduated university in the middle of a recession. Finding jobs at that point is difficult. So there's a resilience built up in the people that are now employed in businesses that are probably going to push change really and really impact the businesses going forwards from their circumstances as well, not just customers. So I think there's really a cultural shift towards being more supportive and sort of building teams and platforms around that. Yeah.
I mean, Elif, I know you had some experience of other markets with high inflationary environments. I mean, we are looking at. I mean, 10% is looking at my phone bill that was ticking me off about, because because it's being put up by inflation. I mean, and it's significant cost, right? And that's being flowed through, and it will carry on to flow through. I mean, and it affects things like the cost of money and the cost of arrangements, and the fact that, I mean, how do you think that would that will change sort of dynamics in terms of payment arrangements and sort of managing within that?
Yeah, I think when everything is stabilized, it's not a problem, because I worked in Turkey for many years, and when I was graduated from university, the inflation rate was over 100% in Turkey, and it was normal for us. I mean, we were getting salary increases every 3 months, and it was normal. But I think the problem is when you don't know what's going to happen, and it's not stabilized yet. So it's not an easy problem to solve, because on one hand you need to collect fast because the value of money is decreasing every day, but on the other hand, the customers want to pay in longer terms and pay little amounts, and they don't make the calculations about inflation. So when you say a number which is above their current debt, they can't understand it, and it's a psychological thing. So it's not very easy. So in my experience, most of the time you have to accept what is less than net present value, and you have to incentivize the customers for faster payments, like giving some discount maybe from the interest rate and those kind of things. But it's not easy.
Yeah, I mean, I suppose, in Chris and Nina, I mean, do you think we'll start to see some of those dynamics coming through here? I mean, inflation's only been running at 10% on an annualized basis, for 6 months now? I think it hasn't been that long, really driven by, I suppose, energy costs initially, but now we've got interest rates going up, and with food, etc. I mean, do you think we're going to have to think about how we manage that risk and the cost of money differently? I mean, will that change dynamics around some of the collections dynamics? Because with low interest rates, I mean, you can sort of you can wait longer. Nina, yeah, Nina, go on.
Well, I suppose one of the ways that we are managing that risk is, so when we have a conversation with a customer, like everybody else here, we will do an income and affordability assessment and set them on what we believe is a sustainable plan at that point in time. And most of our plans will reach out for at least 12 months and potentially up to 24 months. However, what we do recognise is a few factors, that customer circumstances are continually changing now, not necessarily just driven by employment, but other factors because of inflation and general costs. And also things may get better as well. And so what we are building into predominantly most of our strategies around payment plans where there's an element of forbearance is timed interventions. So depending on the customer characteristics, we may reach out during that plan and just check in on circumstances and make them aware, particularly if they're on a forbeared plan, that their debt is building up, and just asking them to reach out to us if they feel their circumstances have changed. And we recently did something where we reached out to multiple thousands of customers who had been on actually low plans for a period of time, more driven by COVID than the cost of living. And we reached out to them predominantly by SMS as well, just letting them know the situation and whether or not they wanted to speak to us because their debt was building up. And what I found quite surprising around that is, we had a really strong response rate, but also predominantly most of the customers that reached out to us, and this was done in the last couple of months, increased their payments as well. So there's also a lot of customers that are, and again, we've got London and we've got the Thames Valley and we've got everybody. But there's also a lot of customers that are trying to keep on top of bills, are not, are prioritizing some bills over others, and many customers don't prioritize water for a myriad of reasons. But I think interventions and timed interventions and target interventions is a way to manage the risk of the uncertainty.
Yeah, so almost like more frequent reviews or the intervention.
Yeah, and just balancing the operational cost of that. So the more you can automate that, the better.
Yeah, that's going to be my question. I suppose there's a role of technology perhaps in doing that. I mean, Chris, get your perspective on it. From an
I absolutely agree with Nina that the period of review is something that's really open for debate at the moment around what is the regular time you should reach out to a customer and understand it. And we are trying to use more technology in our space as well around what is the right contact method. I think the old school, chuck everyone in a dialer and dial them 3 times a day is long gone, and thankfully that has moved on. Things like text message or applications for our digital portals, etc. We find get more contact from our customers, and it enables that mitigant then from a cost point of view as well. So it gives that balance of getting hold of our customers and giving them the right information, because some customers don't understand that actually if they pay their debt down quicker, it will impact them in a positive way from a financial services point of view. So it's around educating them while they're in that process as well, but then also using the mitigant of digital platforms, etc., to support the cost of that.
And I suppose digital, Stephen, digital's obviously an opportunity from a cost-saving point of view. But I suppose, the other theme I wanted to bring in this conversation was when we get into consumer stress. There's also only so much that consumers can necessarily sort of reduce. We've been through a lot of reduction of incomes already. We're in this inflationary environment, and there's only so much you can do. What's the solution for us in terms of looking for that? Obviously we've got to gather the data, but are there other things that we can look out there to offer support for customers?
I think that there's been a lot of discussion about how we contact customers, but in reality, in terms of a digital collections process, specifically, you've got multiple tools that allow the customer to contact us, whether it's logging into a portal, sending an SMS, WhatsApp message, email, live chat, all those elements are there and available for customers to contact us. And I think that's the point, really. The stigma around being in debt and dealing with a debt collection agency, it feels like it's slowly sort of being abolished in a sense. In the way that customers interact with us, we're not a debt collection agency in a sense. We're there to help a customer through a difficult circumstance by any means. That's finding out their circumstances. So putting the control in their hands and allowing them to speak to us is much more powerful than saying, in 3 months' time, what your circumstance is like. we want the customers to be telling us and to sort of adjust their arrangements or their circumstances around that aspect, really.
And is there opportunity, I suppose, to gather extra information through those interactions with customers? I mean, is that an extra source of information you can use to then further identify further risk or further opportunities for differentiated treatment?
Yeah, definitely. I mean, it wouldn't be a specific customer with a specific client. You know, in a lot of cases, there's one customer that has multiple debts with multiple clients, and it's how do you deal with that in that sort of circumstance, really? So what that customer tells us potentially informs us how we can sort of communicate with our clients and say, well, actually, customer A on this account is vulnerable now because they've informed us of another sort of. So it's how we can sort of gather that information and share it appropriately and sort of within regulatory requirement.
Yeah. So, and Elif, in terms of like gathering data through the customer process or customer interaction process, I mean, do you think we gather enough? I mean, is that a new area of opportunity for us? We always talk about external data or existing data. I mean, do you think there's more that we can do within our existing processes?
Yeah, I think so. First of all, I don't think many companies use speech analytics at the moment. So what we are doing is analyzing the outcomes of customer circumstances, like if they used any loan or if they were delinquent before. But what customers are saying is also very valuable. And I think the data we gather from digital self-serve platforms are also very important because most of the time when the customer is dealing with a call center, they are not in the best circumstances. So they are limited with work hours, but in digital self-serve platforms, they sit by the computer and they feel more relaxed. And we can track which pages they are interested more, on which pages they spend more time, or if they are clicking very rapidly, those kind of things, if they are checking for help pages. I think these kind of data is very important for understanding the customer and finding flexible solutions personalized solutions for everyone.
Yeah. I mean, do you think it changes? I mean, is it changing the dynamics of conversation? And Stephen, you think is it changing the dynamics? Do you think it would change it even further going forward in terms of like how we interact with customers, but particularly then how that informs our credit risk, I suppose, our collections risk in terms of like then informing treatments?
So I think, I mean, in the example of if we were to use more data, i.e., tracking someone's interactions with a web page, you take that information and beyond a certain volume, you build a process flow that then answers that issue for that customer. Why are they on the help page? What are they looking at in particular? So one example would be a smart FAQ system. Rather than just showing information to customers, let them ask a question and give them the appropriate response there on page. So it's sort of, I think the risk now is taking too long to understand a customer's circumstances and not getting them to the right place quickly and efficiently. So we need to develop tools around how we do that and how we do it appropriately and sort of ethically, really.
Yeah. And I suppose that's one of the things that agents are particularly quite good at is like how do you take shortcuts in processes? I mean, humans are quite good at doing that. And digital processes, historically have been sort of like have been more sort of like linear in the way they think. Although that's kind of changing now, I think, isn't it?
I think, yeah, exactly. The introduction of artificial intelligence and sort of user intent and being able to read that using machine, computing elements or technology allows us to adapt to those situations a lot quicker.
Yeah. So there's a couple of questions that came in around payment arrangements, around, I suppose, are the dynamics around payment arrangements kind of changing? In order to either in terms of the amounts that are being the amounts that are being promised, or maybe the durations of that. I know we talked on duration as well. Would you sort of see any sort of changes that are sort of like taking place in that, or how do we start to think about preparing for it as well, outside of the more frequent interventions? Chris or Nina maybe is good kind of comment on that, or Stephen.
Yeah, I'm happy to go on that one, and we absolutely are seeing a difference. So we track a lot of data around income and expenditures and understanding it, and we are seeing a squeeze in disposable income, and the average amount of an arrangement that's set is slightly going down. It's not material at the moment, but we are seeing a downward trend over the last couple of months. So it's something we absolutely are monitoring, that customers' disposable income is shrinking, and that's, that is an indicator of the future of where we're working towards. And if it's shrinking right now, it'll shrink further in the future. It's really hard to predict in this environment right now around what will that position be for the customer in 6 months' time. Historically, you'd look at, is there going to be a change in circumstances, i.e. are they going to change job, for instance, was the key one, move house, those types of things were the big expenses. However, it's not that at the moment. It's around, what are their weekly bills going to be in 6 months' time? And that's really difficult to predict at this stage.
And typically, consumers being sort of quite proactive around calling up if it's like a life event. So it's usually, something's happened. But we have this almost like increasing temperature that's sort of happening, or increasing expense happening very, very slowly, and it's quite hard to sort of like, there isn't a trigger to sort of flag. I mean, do you find that? I mean, are customers being proactive in saying, look, I can't manage, or is it something that's on us, to your point, Nina, that we have to now call back out much more frequently to check in with customers, thinking about outcomes?
I mean, I think some customers are being a lot more proactive, and I suppose because of how water utility use works, we've got sort of quite a bit of insight in that, because whilst half our customer base is metered, and so we'll get typically a 6-monthly bill and pay monthly, we do have still 50% of our customers that are on an annual bill. And so that annual billing is actually taking place right now from bills landing on mats, and that is due. Those payments are due in April. So we're already seeing, because we've got 50% of our base now who are getting bills on mats, and we are seeing, even with process improvements and other levels of, a sort of call center mitigation through being able to use digital channels, we are certainly seeing quite an uplift in customers reaching out to us and, building within our IVRs. If customers are worried or struggling, coming straight through to one of my teams, and we're certainly seeing a considerably large uplift year on year in us having those customer conversations, despite, like I say, there be other ways that customers can self-serve. So absolutely, there is a level of proactivity. We still, like I'm sure everybody else, see a rather large segment of customers, though, just head in the sand, not really sure where to go and not really addressing the issues. And that's what, when we look at data and the data that we're tracking, one of the data points that we do track is where we've had good payers, and then they're suddenly falling off and going into collections and going into arrears overall. So we do track those and then try and do bespoke strategies to, again, reach out and intervene. But we're certainly observing not all customers are being proactive.
And I suppose some of the proactive nature that you, for some customers, has got a little bit about what you're talking about, Stephen, around the changing relationship we might have, and the fact that if everyone else is in the same boat, it can sort of it becomes the barrier to call up becomes less, which is probably a good thing in terms of sorting out the situation. But it will change potentially the call center environment in terms of volumes that are coming through, and it can have a multiplier effect. I mean, do you think that's a risk we've got to prepare for? Almost like an even more significant increase of volumes over and above just the arrears level, because of the propensity to want to address it. I mean, Stephen, I don't know if you had a...
Yeah, no, so from our perspective, it's a relatively simple answer, because we've obviously been building digital platforms to sort of communicate and manage customers for years. So the sort of shift in our positioning really is everything becomes a lot more digital, where it can't be digital because the customer's in a particularly vulnerable state and they want to have a phone call with an agent. It then makes our sort of contact center team specialize into being sort of like distress resolution agents, as opposed to just collections agents in a traditional sense. So I think that's the added benefit, really. You know, we've got the digitalization, which is managing the vast majority of the collections process, and then we're allowing humans to sort of connect with humans and really understand circumstances and offer a better solution.
And I suppose, how do you sort of manage that blend? I mean, how should we manage the blend? We talked about that on the last session, talking about how when we have an agent talking with someone versus when you have a digital process, and how to best understand when is it right versus when it is not right. And I suppose this particularly in the context of, you know, I suppose credit risk, so to a certain extent.
Yeah. So I think it's the tools that you employ. So from our perspective, you know, we've shifted how we quantify effectiveness within the business to a QA model. So we assess more calls. We're understanding more levels of vulnerability on those calls, and we're able to adapt to that. So I think it's effectively better understanding your circumstances and how you can treat and deal with customers.
And Chris, I mean, how do you sort of think about sort of the best blend? I mean, it sounds like you're working on sort of like digital tools and technology to sort of help smooth the process and sort of help smooth the arrangement process in terms of like managing the risk. I mean, what do you sort of see as being like the value of, I suppose, that agent conversation versus the value of I suppose the digital transactional elements?
Yeah, I think first of all is around understanding your portfolio and what the demographic is that sits in there. If you've got, you know, somebody, and I know there's some stereotypes here, but if you've got somebody who took a mortgage out in the 1980s, who sat down with a broker or a financial advisor and used to doing it in a telephony-based environment, that's the service that they're looking for when they come into collections. That's what they're used to. If you've got somebody who took a motor finance out online 2 years ago, has never once rang up to us, then the digital platform is there. So it's around understanding where the origination came and then working that through to what we expect to see in collections around customer contacts and that kind of uplift. I don't think there's a one size fits all. I think, Stephen, you alluded to this, is around understanding what's the right fit for the customer. If they want to speak to us on the phones, we've got that option. If they want to go digital, we've got that option. And I think it's making sure that they've got the sight of all the options that are available to them, and then resourcing based on our portfolio that we've got.
Yeah. And what about things like, we talked a lot about, I suppose, affordability and arrangements and financial difficulties. What about vulnerability? We haven't talked a lot about that, particularly vulnerability categories. I mean, is there more that we can do from there, from a technology point of view, to sort of like flag vulnerabilities, put them into different queues and flag that as a risk? I mean, and how much, and when does that kind of link back to, I suppose, you know, agent conversations in terms of understanding that? I mean, Nina, you're looking pensive around. Should there really be a distinction, I suppose? Should there really be? I mean, because it is around dealing with the customer situation. At the end of the day, we're dealing with people, aren't we?
Yeah, I know. And I mean, the characteristics of vulnerability may be the same, but actually how that then impacts that customer and what their lived experiences is very different. I mean, I suppose one of the challenges that Thames grapples with is because we do serve everyone. We don't have an acquisition process, and we don't use credit risk tooling to accept or decline. One of our areas of challenge in vulnerability is around the really marginalised and those who aren't engaged in potentially what you call traditional services. They are potentially unbanked. They're potentially new to the country, not using English as a first language, in very deeply ingrained in local communities. And actually, what I would say there is actually that's where digital does not work. You have to have a very different approach to be able to sort of penetrate those communities, build trust within those communities, and that becomes a very human approach invariably. I think more broadly with vulnerability, we do, we have priority services register, as most utilities do, if there's disruptions, and so we use some of that information, particularly where their vulnerability may require high water usage, something like if they have kidney disease, and how we reach out and sort of help them not only financially, but just sort of manage their water use. So whether that be various tariffs that we can offer as well. So we are generally proactive, but I think from a Thames Water perspective, we do have real challenges with deep vulnerability, those layering of vulnerability, and how we really engage those customers in a really effective way to help them. And I think often they are, like I say, unbanked, not taking out loans, living in houses of multiple occupancies and multiple generations, and that can be a real challenge.
Yeah, I mean, you raised an interesting point there, and we talk about, even the title of this is talking about collections risk, right? We're talking about the collections as a process, but actually the people in collections were customers before, and then they were in the, I suppose, the credit piece from the financial services. But are we doing enough in terms of like that pre-arrears conversation to sort of flag risk and to flag, either vulnerability risk, but also in terms of potential collections risk as well? I mean, is there more that we can do? I mean, is that a next area where we need to be looking at in terms of managing risk? I mean, Elif, I don't know if you just want to comment from a data point of view, and then we'll ask the other guys.
I can just say a few words. I think it's a great idea to have some alerting systems where we see a potential vulnerable or delinquent people, but to communicate this is not very easy, because if someone is not in financial problems yet, I don't know how to tell him that you will not be able to pay this in the near future. So yes, we have the data. Yes, we have AI and data analytics now, so we can potentially understand this. But of course, data analytics doesn't has an accuracy level, and if we have an accuracy level of 80%, at 20% we are going to be wrong, and I'm not sure how we can communicate about this, to be honest.
So I suppose, Stephen, the question there is a little bit around how do you manage between, I suppose, that human interpretation, and I suppose gathering the data, but then you need the data to then come up with something, but you don't want to make assumptions around what people are. I mean, that's like there's a manage between sort of the data and then having human interactions.
Yes, I mean, yeah. So we sort of make the vast majority of our decisions off of the interaction from the customer. So we're never really assuming anything and sort of forcing anything upon anyone. And where there is an element of that sort of obscurity around how we might interact with someone, we've got team leaders, ops leaders that will go through sort of highlighted critical vulnerabilities or highlighted critical affordability issues and assess them on an individual level. So really, it's not necessarily a broad brush 80-20%. Well, the 20% don't matter because we've dealt with 80. It's developing the tools to service the 80%, identify the 20%, and then deal with them via appropriate means.
On an individual basis. Yeah. I mean, Chris, in terms of like pre-collections work, I mean, we heard what Nina said. I mean, do you think we're doing enough? I mean, is there more that we can do? And how do we handle some of the difficulty in the conversations that you no doubt definitely have?
Yeah, I think it's really difficult. I've done a few different versions of this in my career, and some with very limited success. Because of that, I think we mentioned earlier around 20% of those customers will be false positives, and they may not be. And that's quite a strange conversation to have with a customer if they're not feeling in that way. The way we're tackling it currently, and I think it's our approach, and we think it's the best approach, is around education. So giving them the tools and the knowledge around what we can do to support, where we've got the tools and the help, the different pieces that we can do, what forbearances on offer, those types, and educate them. And then if they do fall into arrears, they know what that journey is, they know how it works, they know what we can do to support. I think almost challenging somebody to say you may fall into arrears very quickly is quite a difficult conversation to have from a lender. So we're trying to educate rather than almost necessarily challenge them on their financial position.
What role does technology have in that education piece? I mean, obviously we've got, you can talk with someone. There's usually static sites on the web page. I mean, I think there's videos being out there. I mean, there are new innovative ways of sort of like trying to get people to engage, to educate them, and sort of like do that preemptive piece. I mean, the things you're looking at there.
Yeah, I think we're looking at loads there. I don't think we've got it now, if I'm completely honest, Chris. I think we're still on that journey and we're working that through. But there is a lot out there as well. There's third-party companies that do an awful lot in that space around education as well. And signposting to those is really important. And we do a lot around that. So I think there's still lots out there and more we can certainly do. But I think digital is an easy tool to use. You know, a lot of people will sit there on their phone these days and look something up, which is a lot quicker than them speaking to us on the phone, having that conversation. It's a little bit less invasive in some ways as well, if they've got that almost fear of talking to us, which I think is going away these days, but there's still some out there. I think that gives that opportunity for them to understand, look on a phone, understand what we can offer, gives that education. So we do things like sending SMS with links to our website, with different education pages on there, links to our digital platform with different education pieces. So we do that type of approach, and we're finding it's working quite well. However, I still think we can do more in that space.
Yeah, I mean, Nina, what are your thoughts, man? So video is one of the things that's sort of been talked about a little bit. Had other couple of conversations around even like consumer interaction forums as well, which is like, how do you get people to help each other?
Yeah.
I mean, do you think there's more we can do?
I definitely think there's more we can do. I mean, one of the approaches that Thames does in a very targeted way is in that local community area, whether that is wanting to have boots on the ground or working with local communities or charities. They may be local or otherwise. So, for example, we're working very closely at the moment with kidney care. We've also struck a data sharing agreement that's been running for a while now with London Fire Brigade. So we're reciprocally sharing data on customers who should be or could be on the priority services register. So I think there's a lot that we can do proactively. Working, other examples are, we fund roles within the citizens' advice to get that holistic advice for customers, because I think that's a key responsibility that we all have, to make sure that the customer gets that right holistic advice and not just the advice that helps the individual company get what they need. So I mean, there's lots more we can do. I mean, from a data perspective, I think the key thing is those customers who choose to interact from a digital perspective, just making it super easy. And I think most organisations now recognise that they should have all that information on the very first page that they hit, and it's really self-explanatory. It's not some cryptic clue that you have to work in the organisation to understand what it means. But I think the most impactful approach is to have multiple approaches, because one size or even two or three sizes do not fit all. And especially, again, when you have a broad customer base, it certainly doesn't.
I mean, you raised an interesting point there around data partnerships, and things like APIs have been coming up, and I know there's data sharing services that are out there as well. I mean, it feels like that's a theme that's been sort of building, but it seems like it's still quite built on almost like a company by company kind of basis. I mean, do you think, particularly in terms of support organizations, I mean, there could be value from that from an industry point of view? Do you think we're doing enough in that kind of area?
Yeah, I think it's all about organizational priority, really. So no will be the main answer. No, not because most companies won't be putting it in their top of their list. I think something that we are exploring is how water. I like to keep making it that water companies are so unique, but they are, because they have a territory, and whereas most other organisations, their customers, even with other, gas and electricity, they choose, maybe not so much now, but they choose which company they go to. But I mean, we're sort of exploring how we can partner with, we already do with some of the energy companies around data sharing on the priority services register again, but there's far more we can do. And we would love to see, certainly across the water industry, a common place to share information on priority services vulnerable customers, because many customers move out in and out of region. And quite frankly, until I joined Thames Water, I didn't even know who my water supplier was. And why would a customer know if they move in and out of a region? And so particularly if they need extra support, then having that central hub for priority services registrations, I think is really critical. And I think to be trying to mobilise the water sector to do something, and other sectors in the same space is something that we should all be very focused on.
Yeah, I mean, Stephen and Chris. I mean, do you sort of see that as like a theme coming up into that interconnect between the different particularly, thinking particularly of support organisations here as well, like to be able to flag or change journeys. I mean, is that a new sort of data stream do you think will develop, Stephen?
So I think, I mean, I'll answer this purely from a technical standpoint. So we have a development team, we have an API. In terms of liaising with providers or other support platforms, the challenge is not necessarily can they do it. It's do they have digitalization within the business? Do they have a development team that can build an API? Can they build documentation for that API and share it to appropriate sources? So I think from a technical standpoint, you've got fintech companies that 100% it's the highest priority on their list and they're going ahead with it. But then you have other sectors where it's not necessarily a priority to digitalize and share that information via API channels. So it's often the case that with clients we work with, we're liaised with from a technical standpoint on how we can help integration into certain things. So I think there's a real lack of sort of digital adoption within certain sectors and industries at the moment.
I mean, Elif, do you think we're moving fast enough in terms of like digital adoption and that digital integration? Or do you think there's more that we can do? Like lifting off Stephen's point.
I think we're not moving fast. I think it's the normal pace because the world is becoming digital. I mean, it's not only us. So now we are shopping more online and we are getting used to using digital tools. And the young generation they're going to ask for digital channels. It's not an additional option for them. It's going to be their first choice, most probably. So I think we are going in a good pace.
Okay. I mean, I'll go back to the original question, maybe Chris, just to comment, maybe lastly to comment around. I mean, do you think there's enough integration? Do you think integration between different providers and different data sources? Do you think that's going to be a new theme that's going to come up? I mean, would you say that's a new key theme, or do you think there are other ones?
I think it is something that we should do more of. I think that there's certainly a challenge in the industry at the moment. There's lots of different charities and providers that do very, very good jobs that aren't linked up themselves. And therefore different lenders, for instance, will go to a particular one that suits their demographic of customers, but that information isn't shared. I think, the more we can share data around supporting vulnerability, supporting customers to educate them and give them, especially when we go back to the original conversation around cost of living, I think the more we can do that, the better it will be. However, I see that being quite a journey, if I'm honest, from where we are right now. It's very disparate at this stage. I think every company has links to charities and to different debt advice, but they're all different and they all share slightly different things. I think to get that uniform approach across the industry would be really powerful, but I think we're probably a way away from that. And
of course, it's very hard when you're actually running the business as well. You have to keep things, keep the processes and keep the existing customers happy as well, right? So that's
absolutely
that's the reality of it, unfortunately. But it's interesting where things might be going. It's interesting in terms of like flagging. It sounds like there is more collections risk out there. I mean, from a risk point of view, we're seeing more arrears coming through. It still feels like it's kind of subtle in terms of like it's like this increasing temperature, and we're starting to react to it by having sort of new flags that are out there, changing some of it, thinking about how we change some of our arrangements, how we interact with customers to a certain extent. So it feels like it's a trend that's starting, and it's not sort of spiking, but it's gradually increasing and probably go over a longer term trend. Yeah, that's kind of what I'm picking up from the conversation. So Elif, Stephen, Nina, and Chris, thanks very much for joining the conversation today. I really appreciate it. I think it's fascinating just to get a bit of a sense check in terms of like where we currently are. It still feels like we're in a lot of change, but it's interesting just to hear what your ideas are and sort of like how you're handling it. So perfect. Thank you very much.
Yeah, Colin. Thank you, Chris. Yeah, no, it was brilliant. Really good. Really interesting to hear how the different sectors are approaching things as well. So thank you to Nina, Elif, Chris, and Stephen, obviously, for their insights. Really great. yeah, a lot of good conversations going on today. We're going to continue it at 11:55, where we will be looking at a discussion around. We've got a discussion at 1 p.m. on looking at cost of living and how the collection's going to deal with it. Sorry, and then the next one, which we've got coming up shortly, is going to look at measuring affordability and vulnerability as well. So yeah, we're looking forward to that. But for now, we'll round up and finish up, and look forward to seeing you all either on the next session or at a future event. Thanks a lot, everybody. Cheers. Bye bye.
Thank you.
Thanks, everyone.
Lovely. Thanks, Chris, for that. That was great.
You're still live.